Good afternoon, good morning, good evening, wherever you are in the world. Welcome to the proptrade.com. It's non-farm payroll day already. It's Thursday, not the normal Friday. Obviously, it's Independence Day, as the Americans love to celebrate. Tomorrow, Friday, long weekend in the United States. People chilling out, heading to the beach, barbecue weather. Obviously, schools are out, colleges are out, universities are out. The Senate and the House still keep talking about Mr. Trump's beautiful bill, President Trump's big, beautiful bill. And we've got a bit of a risk on vibe this week. He ain't seen the stock markets up strongly to start July. It's consolidated here yesterday on the on the Dow, and we're up. Futures are up a tad this morning. S&P yesterday, the S&P 500, the world's most important stock market, having breached 6,200 on Tuesday. Wednesday we were up just a tad. How much we were up yesterday? I didn't make a note. Did I make a note? Yeah, 29 points, 6277. The Nasdaq, the wider Nasdaq, was up 0.94 of 1%. The Nasdaq 100, the top 100 tech stocks, still nicely breaching 22,000 last week, and we're holding that nicely, 22,650 this morning, ahead of non-farm payrolls, which is coming up very, very shortly. Expectations are for around about 110,000, but a lot of the big houses on Wall Street have been reducing their numbers expectations for that. So the Reuters poll still has 110,000. The Bloomberg poll that's just been updated has brought the consensus down to 106,000. Sorry, let me just put up today's. There we are, 11 minutes today. Data 106,000. Expectations for the key unemployment to tick up just by 0.1 of 1% to 4.3%. Month on month earnings slipping 0.1 of 1% to 0.3 of 1%, and average hourly earnings 3.9% is the consensus. The range is 3.7 to 3.9. Quite a big range, not as big as normal on the headline number. Where are we? The 110,000 here. It's the most of the consensus is within the 90 to 130,000, but the entire range takes us from 50,000. That's one of the small investment banks, up to 160,000. Lots of chatter because of this impact of the squeeze on immigration and the expulsion of people the current administration don't like. That's squeezing the jobs market potentially. Those people that were earning either legally or illegally have left or been kicked out, and it means that those jobs aren't getting filled. So therefore, that JOLTS number was higher, is one reading of it. But if you look at the sectors of where the vacancies were in the JOLTS numbers we got earlier in the week, it was very much in the areas where perhaps these immigrants, migrants, and the people that have been excluded from the United States would have taken jobs, the health, the leisure, the hospitality sector. So yeah, we'll see. This number could come in quite low and still not spook the market. So anything under 100,000, simply because of the psychological nature of 100,000, could spook things. But I say some analysts have got numbers as low as 50,000 for today's reading, and 90,000 is the core, where most are centered at their low range. So we'll see what that looks like. The detail, therefore, becomes more important. So things like, I talk about this every month now, the U6 unemployment. Remember, it's the wider measure of unemployment, and it's come significantly down, as normal. The U3, which is the main headline unemployment number. Where are we? There's so many numbers today. There's the U6, the main where's the main unemployment number? There we are. It's underneath me. To 4.3%. So this U6 measure, I say it's a wider measure, takes in more significance of the part-time sector, and that's been an area that's been growing at more rapidly than the full-time sector. It's talked about less these days, but still a significant wedge. People still trying to find, taking part-time jobs, but still trying to find full-time employment. So yeah, see how all these numbers come out and how it rings the market. As I say, so far stocks are really sort of better day yesterday from our down day on Tuesday, and we're sort of sideways action. The DAX still is a bit moribund and going sideways. And the FTSE, the UK 100, which we actually have an open live trade on, came within a few points here on Monday. I think we took it on, 30th? Yeah, 30th, of getting stopped out. But we've been moving up ever since, and it's in the money. There's our entry. We're in the money. We're trading at 8,810 at the moment. My provisional target was a bit arbitrary. The when I put that target on, to be honest, is 844. That's like 8844. There wasn't a great deal of science in that target level. It was just really this cluster, this resistance area through here. So anyway, that's now in the money, and the FTSE is back up, having had a bit of a rock and roll day yesterday. Ahead of the sterling immediately, it certainly did, and it took us out of some of our sterling positions yesterday, but more on that later after the main news of the day. So if we just bring in the Forex Factory calendar, you can see the changes 6 minutes to the data. So the headline number, which everybody focuses on, and in my humble opinion, it's far too much emphasis. We've been drilling or moving down gradually, although as we said yesterday, the administration, Mr. Trump and gang, are saying, the real number, the blue column, has beaten expectations for the last 4 months, but the last 3 month average is now 135,000. So if we come in around about the 100,000 level, or under or consensus around about 110, that will be the first miss for a while. But as I say, if we continue this trend of beating expectations, obviously it's come narrower over the last 3 months. That again give much more gusto to, as if he needs it, President Trump argument about cutting rates now. I mean, he's got very personal with Jay Powell. Completely unnecessary, but that's how he swings, isn't it? Quit now, I think he texted out, or he Truth Socialed out yesterday. His big bill, his mega tax bill, is one big beautiful bill. It's got through the House. They're still talking it out. The Democrats are trying to spin it out as long as they can, but that looks like that's going to go through. There's a trade deal announced with Vietnam at 20%. So it suggests that the main tariffs with China may not have much further to fall. So that might spook markets when we have a look at it in a bit more detail after this obsession on the jobs numbers today comes away. And also this morning, I've still got 4 minutes to chat. So also this morning, it's actually on here. We have, let me just go back to our calendar. We've had some really good positive services PMIs. And remember, the services sector is by far the most significant contributor to GDP, globally GDP, all over the place. A bit of a slip in China earlier this morning, but in Europe, they've been much better than expected. Spanish ones there, 51.9 from 51.3, and I expected a slip. 52.1 is still one of the best in continental, or the best in continental Europe, Italy. It slipped from last month at 53.2 and missed expectations, but it's still better than most of their compatriots. France, Germany remain in contraction, but we're getting there. We're moving back up to the 50, the key 50 pivot, and the overall composite for the Eurozone was closer to 51 than 50, so that was deemed a B as well. Across the English Channel, the UK number came in nice and healthy, some good positive data for the embattled Chancellor of the Exchequer yesterday. She's caught shedding a tear in Parliament. Felt very sorry for the poor woman. Just pressure of the job, pressure of what's going on in her personal life, constantly under scrutiny, a barrage of criticism all the time. But 52.8 for services for the UK economy, so picking up, and composite came in at 52 flat as well. So some good PMI data in Europe this morning, obviously added to the argument of the slow recovery in Europe starting to perhaps gather pace. Excuse me, sorry, there's somebody here. I didn't open the chat box. Sorry. Good afternoon. What were you saying, my friend? I'm only viewing. I don't understand anything. W for the efforts. Thanks for the efforts. This is okay. Well, if you're a trader, this is probably my friend. This is the most significant news event of certainly this week. Non-farm payrolls, significant. Some say the most significant event of the week of the month, I should say. Always comes out on a Friday because of the holiday. It's coming out on a Thursday today. It's important simply because number of jobs being created each month or lost each month is important to see how well the health of the US economy is doing. The US economy is the world's biggest economy, and it has an impact on the rest of us wherever you are. I don't know where you are in the world. A thick high destroyer or something, tie destroyer. Okay. And it moves markets. It moves stock markets. It moves currency markets. It moves the credit market, treasury market. And it impacts all of us. So it impacts, it affects the price of oil and gold, how well the US economy is doing, and jobs is a big part of it. Jobs are important because the Fed, the people at the Federal Reserve, the central bank in America, the United States of America, they have a two-pronged mandate for price stabilization, which is basically inflation. And they want to see that number, that CPI number, the consumer price inflation, down to 2%. It's proving a bit difficult to get there in the United States. And the second mandate is a stable jobs market, full employment basically. And that's typically measured by the unemployment rate being below the 4% level. And we're at 4.3%, so we're nearly there. But there's lots and lots of nuance and difficult things in there. But thank you for your questions, and W for the efforts. Is that good? I don't know if I don't understand the speak, my friend. But anyway, we'll see how the markets move as the data comes out shortly in the next few seconds. So there's the. Let's just close that down. There's the numbers. We've also got today the weekly claims, which I'll come on to after that's coming out now as well. Remember that 245,000 we had a couple of weeks ago, and we are pitching up over the 240,000. So this will be quite key, I'm sure. So we'll look at that and we'll see how we move the market. Let's put in some the major pair, which is the euro. And we go down to the 5-minute time frame. We see how we react, and there we go. Euro weakening. It's a stronger dollar on the data. Let's have a look what the data is actually telling us. Oops, that's not on there. It's on. It hasn't updated. This one should have updated. So it's a beat. It's another beat. So it's the fourth consecutive month where job creation in the United States has beaten the market's expectations. Unemployment claims, on the other hand, have gone down again. It's from that 245,000. Unemployment rate has gone down. This is a cracking a set of data for the president. He will be singing from the Oval Office later on, and all his sidekicks will be doing just the same as well. See what earnings looks like. That's a bit delayed, but that is a good number for the US. Let's just see if that refreshes without me having to update everything. No, it's not. It never does. Does my editing. Where are we? Tuesday, Wednesday. So that is yeah, it's a significant beat on that front. Phones popping all over the place. So let's have a look at the detail here. Here we are. So let's start with stay with the non-farm payroll. So 147,000, much better than expected. Last month was also upgraded from 139 to 144. That's positive. Weak manufacturing payrolls, so that's again, it's detail, but that's a bit of a fly in the ointment. Private payrolls were better than downgraded, and not as strong as expected. Participation rate has actually slipped. So again, it's this number there's perhaps more people have come in. But the key thing is the unemployment rate. So we've got a beat on the headline and unemployment coming down significantly. This will put massive amount of pressure back on Mr. Powell and the Fed to indicate they may actually start to move rates as early as July. The data is not looking to weaken. As I say, the jobs numbers though still holding up at 200. New claims coming down a tad, and it's still a relatively strong, robust job market. So there'll be some saying, July still might be too quick to move, but it's less than 3 weeks ago. So we see what more data comes in. CPI data is it next week or the week after is the next key pointer for the US to a US for the central data. Sorry, I was just checking my other feeds here. The other I've lost my. There we are. The next key piece of data for the Fed to get their teeth into following this non-farm payrolls, the last one before their next meeting. So likelihood of a let me just find that of a rate cut in July, I would guess would have ticked up. It was about 75% earlier on today. Let me just see if this is refreshed. It's now moved up to 25.3. I think I'm not sure if that has refreshed from the data. 23.3 still. No, perhaps not 74. Yeah, so it has gone down a little bit. It was 74. A 74.7% chance of no change in the rate according to the futures market. And if we look here a week ago, it was closer to 80%. So it's come down quite significantly. It's been coming down all week, given what Trump's been saying about Powell and putting the political pressure on an independent, what is always deemed an independent central bank. And so there's a 25% chance of a cut, over a 25% chance now of a 25 basis point cut when they next meet on the at the end of July. Next meeting is here the 29th and the 30th of July. So for the administration, that's a strong non-farm payrolls. Again, it's another beat like we saw in our calendars here, or our numbers here. So we've come in at 147 from an expected 110,000. Some, as I say, some as low as 100 and 50,000, wasn't it? Some were participants were talking. We had a core of 90 to 130,000. So it's better than that. The top was 160,000. We come in at 140,000. So those at the top of the range are better. Nobody was talking about this is the big surprise. The unemployment rate coming in at 4.1%. We were, all participants were looking at 4.2 to 4%. So that's a big surprise. Earnings, don't see it on here. The monthly earnings number is normally coming. Why isn't that updated? Just refresh that. I think it's 0.2 of 1%. So that's actually weaker than expected. We were looking for 0.3, but again, that's in the realms of expectations. The 0.2 of 1%, and the annual and the monthly annualized earnings number. Where is it gone? Average earning, the average hourly earnings has slipped a tad to 3.7 from 3.9. That's a lower range of where the market was expecting it to be. So overall, that's quite a strong number. We have got a slip in earnings, but more jobs. So therefore, perhaps these jobs are getting filled in these areas where there was vacancies. I'll have to look at the detail of it. Let me see if there's anything across anywhere else that they need to do. Traders scrap wages on Fed interest rate cut in July. So that clearly hadn't moved. The chances of them doing that now, we'd argue the market's strong. And it's been reflected in a rise in Treasury yields and a strengthening Of the dollars here, the euro dollar here immediately has moved from 117.86 to 117.50. Sorry, 117.25. So a 50 pip move in the immediate aftermath of the non-farm payroll data. So dollars ticked up a tad, and obviously that doesn't impact really the strength of the weakness against the dollar. Aussie at 65.50. Where are we? Still back to 65.50 again. A relatively big move. Dollar CAD is back over 136, but this is in the 5-minute time frame. If we just use the CAD as an example, the trend has been very much down, and that trend is still very much set to the downside. 130 with this 135 38 area. If we don't close on 136 today on that. Swissy, our best mover of all. Dollar coming back yesterday and again today, it's back up, but still huge down leg. We had lots and lots of pips bagged on that one. The yen, many are expecting it to recover against the dollar going forward, but the central bank there, getting less hawkish about raising rates. There was a comment this morning actually in some of the Japanese press about one member of the Bank of Japan talking. I can't remember where I didn't make a note of that. Talking about having, it's not this delay that they've had maybe coming to an end, and we may be looking to actually access some rates, but there you can see the market hasn't taken that into account this morning. We're back, dollars back up, and still shy of the 145 level certainly, but up in the last couple of days against the Japanese yen. I say euro 117.40 and sterling 136.20. Having had that shock move down yesterday on the political fallout of the finance minister in the UK not getting backed by the prime minister directly in the UK. So worry about her fiscal policies and monetary policies getting turned on their head potentially. So we had a run on treasuries, a run on sterling, but we've come back today, and obviously that uptrend against the dollar certainly remains very much intact. We had a massive move for euro pound yesterday as well on that. We got some good profit on that yesterday. Through our T1, we rammed up our stop loss really behind it because I'm pretty sure that wasn't going to hold. We went to this 86.70, which had been a high for 2024, right at the beginning of the year 2024 last year. So over 18 months ago, 18-month high we hit for euro pound yesterday, but we came back and we got closed out on our second position yesterday, but some nice profits on euro pound. And you don't normally say that, it's one that doesn't move particularly aggressively. Obviously we had this big move at the beginning of April, tariff driven. But we went to the 86.70 January 2024 high yesterday, the November 24 high at 87.65 was a stretch too far on this particular rally. So sterling still relatively well bid. So let's have a look at the move in the stock markets as well. S&P 2639. We've got the 5-minute chart there. So let's have a look at all the stock charts. So again, so dollar was bid, stocks rallied on the news. It's given back about 30% of that initial rally. So fading that rally, but that still looks okay to me. See how the next few minutes pan out. The Dow similar, but more of a retrace on the Dow. So again, the Nasdaq outperforming, and the S&P 500. Did we look at that? Yeah, more or less the same as the Nasdaq. Yeah, Nasdaq's doing the better. Retraced less. S&P a bit more than close to half of that initial rally there, isn't it? As we come back, so fading that rally to the upside. So the dollar also might start to slip. So yields are up. Futures are up on that strong again. We're giving a little bit of it back in the second 5 minutes of it, but we are up for the day anyway. Let's just show you the day movement. So yesterday, this time yesterday, we were playing with the 6,200 level, and here we are 40 points higher here on the S&P 500 at 6,240. So the trend from yesterday and into the close of the US trading session and the Asian session and the European session this morning, all is supported by the 20-hour moving average and more importantly, the 50-hour moving average, as we hold over the 6,200 level for the S&P 500. So stocks are bid on that stronger than expected non-farm payroll data. The other thing as well, as I say, I touched on is the weekly unemployment claims. And they've come in better than expected, still strong and down from that 240 level, that 245 we had a few weeks ago, remember. So as you can see here, the unemployment claims are doing better. So again, this is good news for Trump and his administration. Again, have undershot this expectation of them rising. So there's so the mantra that Trump has been playing, will get re-emphasized today very, very strongly. So unemployment, headline unemployment to 4.1%. Weekly claims showing the strength of the US jobs market. The non-farm payroll beating the expectations for a fourth straight month, 149,000 compared to many we're talking about under 100,000 potentially today, and earnings slipping a little bit, but nothing to get too excited about. And as we saw yesterday, this the divergence between the ADP and non-farm payroll continues to be very wide. We had that jobs. I mean, still a valid data point, and it still could get drawn into question when the real impact of the tariffs starts to kick in. Remember, we've got the July the 9th deadline that Trump and Bessent have talked about for trade deals to be done. Bessent's talked about moving that out to possibly Labor Day, the 1st of September. But good news again this morning. Vietnam come under pressure, agreed to the 20%, and so this idea of the melt up, as people call it, in the stock market, this scenario where things, not as bad as expected, jobs are holding up, inflation, the inflationary impact of the tariffs aren't as bad as expected, and we still haven't seen any real hard data to prove that otherwise. But so hence the recovery we've seen since that April nadir, as we went all the way down here. It's a daily one. As we went all the way down here to 4,800 on the S&P 500, and here we are back over 6,200. So a huge recovery from the beginning of April to here we are at the beginning of the summer, beginning of July. Everything still looks okay. Everything looks quite rosy. Next risk factor, obviously anything could happen geopolitically. But as far as the US economy is concerned, it's, from that pure stock market point of view and investor point of view, that's looking pretty good. And unfortunately, depending on your political callings, but Trump's bill will certainly increase the deficit, but the feel-good factor it might create from certainly for the top few percent in the country, whether that trickles down to the rest of the country is always questioned politically fiercely, but that is the mantra, and that looks like what's getting through the Congress and by the Senate and the House. So we'll see. Let's see if that CME has updated. Probably hasn't. 74, so it's gone 74.7. Chance of a change. Yeah, there we go. As expected. So that strong data has taken us from 74, a 25% chance of a cut ahead of the data. Strong data has just wiped that off the table. So we've pushed back again. that will get up the nose of the president. He'll have something to say about that. But the markets are what the markets are. So whether it's actually increased the chances of a September cut, not really. No, that's still around about that 74% level. So that hasn't increased particularly. So oh, hang on, that's the chance of it being cut 74. So that has moved a wee bit. So but not much. You can see 72% yesterday, 74% today. So hang on a minute, that doesn't read right, does it? 6%. All right, so we've been a big move by 50 basis points yesterday. 20%. It was only 3% now. So we are back to where we are. So 22% chance of it still being where we are now from in as far out as September, whereas yesterday it was literally only 6%. But having said that, if we go back a month to the beginning of June, it was a 30% chance of rate still being where they are. So we still have this volatile number. So private payrolls and some of the 74 from 100. So it wasn't all magnificent. There was some sort of caveats in there. This manufacturing payrolls, remember, it's this hugely symbolic sector of the US market, and particularly the Trump base, it still remains very weak, and a decline of 7,000. Private payrolls only coming in at 74,000. There were expected around about 105,000. And last month's been revised lower as well from 145,000. I think that one was. I can't remember that off the top of my head, but I think it's around about 140, 145,000 that's been revised, but it's been revised lower. The trade balance still, bigger than expected, so still importing stuff. And that U6 number, I mentioned that earlier, yeah, that's come down by one tick as well to 0.7%. But obviously the headline is the 147,000 new payrolls, and the unemployment is probably the one that's going to really capture the headlines as we move forward, coming in at 4.1%. As I say, nobody on Wall Street was predicting an unemployment rate that low. Citi, interesting, yesterday we're talking about a very low number, 85,000 for the headline, and unemployment popping to 4.1%. Deutsche Bank, we're looking at about 100,000 and unemployment holding up at 4.3%. Wells Fargo, I haven't got unemployment there, we're talking about 100,000, but they'd reduced it from 115,000 just yesterday. So just shows you, we can all get it wrong. The experts can get it wrong. This idea of crackdown on immigration and the export of workers, immigrant workers, is starting to play out. So stocks hold up. The dollar has ticked up a tad on the data. Whether it holds it or not, we'll see. The euro down on the day. Obviously, again, technically we got to this 118 level, so we would expect a bit of a retrace from that. But it's quite a significant down day. The first big down day. Obviously, that's far from over, but the first big down day since the 17th of June now. You can see this big red candle, so we are due for a bit of a pullback. And here on the hourly chart, down 117.20, obviously the low of the day and the low since 30 for the month, really, since the 30th of June. We were last euro was last down here. So again, if we trip down to the 15-minute, it's been trending lower all day. And we've had a leg lower in the first 15 minutes and the second 15 minutes after the day. Still with 10 minutes to go, it is testing the lows of the day as well. So interesting stuff. So chances of a July rate cut right off the table now with that strong jobs market. Again, the jobs again continuing to hold up. So the impact of tariffs, not being seen in the jobs market, and inflation still next scrutiny. I think it's and it's not next week. I think it's the following week, isn't it? Sorry, let's just roll that out. CPI, Chinese CPI. Yeah, it's the next week, isn't it? I think the US CPI data comes out. There we are. US CPI the 12th, the 15th. So it's not next week. It's the following week is the next interesting read. We've obviously got the RBA and the RBNZ next week with their rate announcements. We've got OPEC meeting over the weekend, and the ECB meeting concluded yesterday. And Lagarde was speaking yesterday. Mr. Bailey was speaking this morning. Where was Mr. Bailey this morning? Meaning of reserve currency, Andrew Crocker in London. Oh, there we go. Meaning of reserve currency. So it's a technical lecture from the governor of the Bank of England this morning. So that's strong data. We'll see. Let's see what these services numbers look like in a little over an hour. So watch the market for that, my friends. We might see if this is strong, like we have seen in Europe. Less so sorry, let's go back to our economy so you see them all on here. These strong PMI or better than expected PMI data from Europe. We get a better one from the United States later on. That would continue this move for the dollar, one would expect. But let's see what that data looks like in about an hour's time. So thank you for your time, everyone. It's Thursday, not Friday. So PMIs to come out of the United States ahead of the big long weekend. Again, remember, guys, the US is closed tomorrow, so there'll be positions getting closed off to close off their first a week of the new month, first week of the new quarter as well. So there might be a little bit of volatility later on, some selling into the end or buying into the end of the day. So watch that, and obviously any political news that's come up and coming. And there's all sorts of areas that could come from, whether the bill gets through, whether something happens in the Middle East, whether something happens in Iran or from Iran, all sorts of things on the agenda that we have to keep our eyes peeled for. So keep your stop loss there. Don't get it too close. But if you've got a trend, ride it. And finally, I think I've only got 2 open positions at the moment. I don't know how that number has benefited. We had a Euro Oz that's going absolutely nowhere. It was sort of sideways, nearly hit target, nearly got stopped out. Euro AUD, Euro Oz. Where are we? We're out of the money again now. 15 minutes. Go to the 4-hour time frame. These are end of day positions, remember. So there, we're just fluctuating around our entry level. I might close that out because I'm getting really bored. But there's a target, there's a stop loss. We got closer to the stop loss than the target, to be honest. But yeah, I might just close that later today. I'm getting a bit bored with that one. To be honest, I know it's not a great trading technique, but we're all human. And the other position that's open at the moment is the DAX. Sorry, not the DAX. The FTSE, the UK 100, which we saw earlier. There we go. That data is lifted stocks generally, and sterling's been no different. So again, we're at a high. So we might be getting to our target shortly, and I'll decide what to do if we do. So that's up. Other trades overnight. There's been loads going on. I've got a list. I've actually written it down here from my other list. The euro, this is yesterday. The euro hit target again, so we were up 75 points, 105 points for the total trade. The Aussie and the Kiwi, which we were long, we pulled the stop losses up, and it hadn't hit target. Let's go back to the majors. Hadn't hit. I think I might have moved. Yeah. See, the Aussie hadn't actually got to its target, so but I'd pulled the stop loss up here last night, and we got taken out on that one last night. So the Aussie only made us 8 points. The Kiwi was a similar, but we'd already bagged half the profits. It already hit target 1, the Aussie, and then we pulled stop loss right up, and it came back. That was another 12 points on that. Euro pound, as I said, we got 35 points on the first move, and then a huge this morning. What did we get this morning? Was another 64.5 points. So what's that? Do the quick maths. We got nearly 100 points. In fact, it's over 100 points, isn't it, on the euro pound, which is very unusual because we had 2 positions open on that. So euro pound has netted as 100 points this week. Kiwi, I said, was 12 points. The Aussie, the pound Aussie, I told you yesterday we got stopped out for 68 loss. Pound Kiwi reversed. We took it out at the second target. Target again. It went up. We pulled the stop loss up to T1, and that was another 26.7 points. And then gold, $113 yesterday. Again, we showed you that yesterday, didn't we? Did we talk about that yesterday? I think we did. We haven't looked at gold, have we? But we pulled the stop loss up to entry for the second half. So we'd hit first target, and then we hit. We came back to on the second half. We hit. Oh dear me! We pulled the stop loss up to entry, so we were flat on the second half. So the $13 netted us 65 points. It's half the position was closed at T1. The other half was open, but netted nothing. So overall, it was 65 points on gold, or 650 points, depending on which broker you're using to trade that with. But anyway, it's been a positive July so far. We're up something like 400 points, I think 411 points so far for July. So we're off to a flying start, and as I say, we've had a very positive first and second quarter as well. So gold at the moment, just why we got gold here today. We've been moving higher or sideways over 33.45, and the stronger dollar has pulled gold down this morning or just now to 33.11 is our low. We're currently trading at 33.25. So that's here on this hourly chart, run out of steam, and it looks like that might be going lower as well. The daily time frame remains sort of still sliding sideways and consolidating. We had this rally from 3,200 this week, but we're still sorry, 3,300, I should say. We're $30 above that at the moment at 3,330, but sort of sliding sideways. So we're consolidating above 3,300, as I've been saying all week, but really stuck, just flirting with this 20 and 50-day moving average as a big, thick pivot area at the moment. So a bit directionless on the higher time frames for gold, but still obviously incredibly well bid at $3,330 for an ounce of gold. Silver at 36.60. Oil had a really good day yesterday. Remember I said to you yesterday we'd had one of the systems had triggered long on UK oil the day before, so we had a good here. Not this is US oil, but UK. I'll show you. UK oil looks very, very similar. So it triggered long here on my commodities trading system, which I don't share with you, but a strong day yesterday took us over the 20-day moving average. That would have added some positions possibly tonight. US oil similar, strong day yesterday through this big resistance area we've been talking about, the $66-67 level, this flat 20-day moving average at 67.50, and we closed today at 68.28. So up and holding, and support now is at that key 20-day moving average, and these key fib levels as well of this volatile move, courtesy of the Iranian-Israeli situation. So oil currently trading at just shy of $68 a barrel at 67.90. So again, another one that is bid to the upside. That's your energy complex. We've done gold, we've done the stock markets, we've done the major forex, and finally crypto's had a really good run. All-time highs look somewhat inevitable again. We're back to 109,000. We've been talking about this all week, haven't we? A big, strong support of the 20 and the 50-day moving average. We had a technical breach tick up yesterday of the 20, moving away and above the 50. So that's marginally positive. But we've been fairly positive on this with this support holding, and we had a lot of buyers yesterday, so we're back out over the 105 106 zone. We're currently trading at 109, and 111 looks somewhat inevitable now to the upside, doesn't it? Obviously may not happen like it didn't happen there, similar sort of pattern. It came back down again, so we'll see. It's a one candle move so far. from yesterday. So watch that. So I will leave you today, Thursday, with the news that claims remain strong. Non-farm payrolls are much better than expected, 147,000 from 110,000, an extra 35,000. Really, it's not a massive amount, is it? But the chance of a rate cut in July is more or less being wiped off the futures market. And participation rate still holds strongly. The caveats were the private payrolls and the manufacturing, but the big headline number that people are going to take away is the unemployment rate, 4.117. If you go out to more than one decimal place, but 4.1 from 4.2, and many were talking about, not in this range at all. They were talking about 4.2 being the lower chance than 4.4. So that's the key number, these two key headline numbers for a change. So there we go. Government employment up, private payrolls up, healthcare sector up 58,000, total labour force losing 130,000, but foreign-born labour force losing 134,000. There's the big changes in the data. It's just flashing across the Bloomberg screen here. So there we go. See you all tomorrow. It's Friday. The US markets are closed, but everywhere else in the world is open. Nowhere else celebrates Independence Day. So Europe's open, Asia's open. We'll be doing a weekly wrap up of the news. And again, another key week, another key start. But do watch out for those PMI data to come this afternoon in 42 minutes time. I'll certainly be looking at that. So take care, stay safe, and as ever, may the trend be with you, my friends. I'll see you all again tomorrow. Take care. Bye-bye.